Hello everyone and a very warm welcome to today's major markets update for Friday, February the 21st, 2025. We got a pretty bad down day today, so we are going to address the anatomy of a ending diagonal. The ending diagonal is still our favorite Elliott wave count to get to the larger upside targets, but they are very unpredictable. However, yesterday we already showed the financial markets would go lower to our premium members, so that has been really good call. So let's go straight to the price charts. However, before I go to the chart, let's have a quick look at what we forecasted for our premium members yesterday. We said the NASDAQ and NASDAQ 100 would go lower, as well as the S&P 500 and of course the Dow Jones. So for the NASDAQ 100, we were looking for a low at around 21,510 to 21,7060. So far we got 21,614. So far so good. I think our forecast has been on track. The S&P 500, we were looking for a low, ideally around 601070. We got so far 6013. For the Dow Jones, we were looking lower yesterday to ideally 43,315. 43,735. Today we got 43,425. So far, so good. However, we don't think the downside is complete yet, and we might be in a little bit more of a wild ride. And please allow me to explain. So let's go to our website, intelligentinvesting.market. Well, that handsome dude is me. And here we click on the menu, we go to education and click on Elliott Wave Principle. What you will see then is an explanation of the Elliott Wave Principle. And please scroll down to what we call a ending diagonal. Okay, ending diagonals can be to the upside and to the downside. In this case, we're looking to the downside. And as you can see, if you click on it, it comprises three waves for its impulse path. ABC for 1, ABC for 2, ABC for 3, ABC for 4, ABC for 5. That is the very unfortunate nature of a ending diagonal. Question is then, how are these smaller waves all subdivided as well? Well, they can all subdivide into threes as well. I think threes should be the predominant expectation for all waves. B waves are always three waves. C waves can be 3 or 5. Okay, so this is where we currently at, somewhere in this AB of this final fifth wave. So let's start off with the NASDAQ 100. We believe it bottomed January 13th for this red wave 4, but we have no confirmation for it yet. So our alternative wave count, which we will show in a minute, is still operable, meaning this red wave 4 will protract and subdivide and bottom a little bit later this month before the red wave 5 kicks in. Once again, we still cannot count 5 waves up from the August 2024 low. So it could be that we're now in this gray wave B. Okay, so far so good. We're at the lower end of the target zone, can still go a little bit lower, but if we close below 19,340, it really increases the odds that something else is going on, and that's our alternative wave count. So as you can see here, this rally from September into December was also an AB pattern. So you got a strong rally, huge drop. Okay, strong rally, drop, strong rally, huge drop. Strong rally, huge drop. Okay, so what did we get? Strong rally, huge drop. So this really reaffirms that we are in this ending diagonal. Now we did close strongly below this uptrend line, so that is concerning for the bulls. That means our alternative Elliott wave count will then get into play, and we're going to see this protracted red wave 4. Okay, we've never taken this off the table, so this is still very possible. Nothing new really that we get this months-long red wave 4, more of a sideways pattern, which will then of course create what people would call from a technical perspective a bull flag, and then off to the races. We still cannot count from the August low 5 waves up. 1, 2, 3, 4, 5. Okay, it would be quite odd to have this completed as a full impulse. So that's our alternative for now. How would that look on the NASDAQ 100? All right, let's start top to bottom on this price chart. First and foremost, we're getting close to oversold on the daily RSI 5. And here you can see every time this indicator gets oversold, which means it goes below 30, we're getting close to a buyable dip. We had one here, of course, in January 13th. We had one here late December. Okay, we had one here in November. And of course here in September, and of course here in August. So we're getting close. This is then the alternative for that wave count. Now, given how oversold the RSI 5 is already, 31, it seems this is going to be a stretch, but price is the final arbiter, and a break, of course, below 20,999, so about 21,000, will really suggest that this red wave 4 is underway. And please remember, a C wave like this can go quick. Okay, this can be done in 2-3 days if it so desires. So you can maybe get a sideways day, another sideways day, and then lower, similar to what we saw here for this red wave 2 from August into September. So this is how we would then apply the alternative wave count to the NASDAQ 100, and this would then be a irregular flat wave 4. Nothing out of the ordinary. We had 3 waves lower, 3 waves up, and then we should now see 5 waves lower for this wave C of 4. And remember, this C wave of wave 4 can be a running fourth wave or a running flat. That is that the C wave doesn't go all the way down to the January low, but stalls somewhere around 21,000. It's very possible, okay? It's not our preferred wave count. If we see price stall at around 21,000, we're going to go to our second alternative, which is shown here, that we're in this 2/B. So we had 3 waves up for wave 1/A. We're now in 3 waves down for 2/B, all in accordance with this Elliott wave count. 3 waves up for 1. Of course, this is very stylized, right? This is very clean, but on a daily basis, that's not what you get, right? On a daily basis, it's much more complicated. So we should see more downside over the next few days. And remember, this 2/B wave can go down to, again, around 21,000. And then we get a 3/C wave, okay? Given that this is red wave 5, which is equal to this yellow wave 5, and ABC is probably all we're going to get, okay? That's probably all there is to it. Let's see if I can find the correct there. So they have 3 waves up for 1A, 2B, 3C, and then the market can decide if it wants to do 4 and 5 or not. Most likely, we're just going to see an ABC. Okay, so far so good. Nothing out of the ordinary yet. Okay, as long as the January 13th low holds, this will still move higher in a ending diagonal fashion for wave 5 of 5. So then this whole rally since the August low was an ending diagonal. And of course, the whole pattern from the January 13th low will also be a ending diagonal, which is then 3 waves, potentially 5 waves to be determined. So for now, we're going to let this 2/B wave play out. So I don't have any targets for 3, potential 4 and 5 as we had earlier. But again, you can see that even the index has not reached the normal target zones for a 5th wave. So that's the alternative. This is what we presented yesterday to our premium members, that this was this gray wave B underway. So far, so good. Still very possible as well. Unfortunately, with this sideways price action, remember, we haven't gone anywhere since December last year. Okay, we're back to where we were here in early December last year. So that is almost 3 months of nothingness from a long-term perspective, that this B wave can still bottom out here, and then we get a C wave, okay? Remember, once again, that we're in this ending diagonal. So this wave 3/C, okay, can again subdivide ABC. So we don't know that just yet. So this is one option as well. And it's very unfortunate that we get these options, but that's what you get from the Elliott wave. We're trying to interpret things as good as possible. Now, if we go below 21,454, most likely it's not a B wave, and we'll switch to the other option that I just showed you. So from a short-term perspective, this is the hourly chart. You can really see how messy the market has been since the top here in December. All right, this looks like 3 waves down, looks like 3 waves back up. By the way, this cannot be a wave 1, wave 2 setup, because we made a new all-time high. Okay, we made a new all-time high, so it cannot be a wave 1, 2 setup. So here we have A1, B2, 1, 2, 3, 4, 5. We foresee still a little bit lower with a bounce for 4, maybe for a few hours, and then a low for this C/3 wave, and then the market can decide if it wants to do a larger impulse lower, yes or no, for a bigger corrective pattern, which I will show in a moment. So this is the target zone. We're right there, as forecasted yesterday. We're right in it. No harm done. So then we have 1A, 2B, and this is then A of 3. Okay. So this is then A of 3. We're now in B of 3, and then we get C of 3. All right. And then we get ABC for 4, ABC for 5. See that? Okay. Very messy. Very hard to follow. This is our alternative from a bullish perspective. So this, of course, suggests we can go lower than the gray B wave, but it's still a B wave just 1 degree higher. And that would count this way. Then we have ABC for wave 1. Once again, remember that we have ABC for 1, ABC for 2. Okay, we're just like further back in the progression of this ending diagonal. Okay, and we're going to complete the impulse C3, most likely for A, a bounce for B, and then C. So then this was ABC for 1, ABC for 2. We're going to get ABC for 3. Very complex and complicated. Unfortunate nature of this market. I don't make the market. I would have liked to see a impulse pattern, the 1, 2, 1, 2, and then 3, 4, 5, 3, 4, 5. Well, unfortunately, that's not what we got. That's why we put out an alert to our premium members yesterday saying that's not what we're going to get. We're going to look for lower prices first. So now the market can decide if this is a wave 2 of that ending diagonal, or are we already in the wave 3. I cannot determine, but I do know we're still in a larger ending diagonal as long as we hold above the January 13th low. All right, so how would this look for the S&P 500? Well, this is the alternative based on the alternative for the NASDAQ 100 that we're in this C wave of a wave 4, and we had a very protracted B wave, okay? ABC, very complex, overlapping, and we're now in a C wave lower that can easily go back to about 5,800. We don't have to go all the way to 5,700. It's not necessary. Okay, we can get a running flat where we stall out somewhere around 5,900 and then the wave 3 or 5 or 5 or 3. This is what we presented to our members yesterday, and so far so good. We're right in this B wave target zone, and a C wave is still possible. Okay, this is still possible. There we get the C wave. Unfortunately, the numbers are a little bit messed up here, but you get the idea. We're in this B wave. We're going to get the C wave, and then the market can decide if that C wave was all of 5 or 5 of 3, or if we're going to see a 4 and a 5. Okay, that we don't know yet. So that's what we're going to put the ABC label on the market for now. Again, as you can see, we're getting close to oversold on the daily RSI 5, which are often good low-risk buying opportunities. In this wave count, we're now in wave B of wave 3. We should see a 4-5 for wave C, complete the B wave, and then off to the races for the C wave to new all-time highs. This pattern is, of course, contingent on holding above the early February low. If we go below the February low, then this cannot be an A wave, this cannot be a B wave, and we're going to move to this wave count, a large protracted 1/A. We're now in a large protracted 2/B, and then we're going to get 3/C. That is shown here on the daily chart also. And of course, this wave count is contingent on holding above the January 13 low. We go below the January 13 low, then we are really in this protracted wave 4. Then this was wave A, this was wave B, and this was wave C. I'm sorry we have 3 options available, but that's what you get with a market that hasn't gone anywhere since early December. Okay. What looked really like a nice 1-2 setup is now, of course, mitigated by the price action. We anticipate, we monitor, and we adjust. That's all we can do. And if the market starts busting below, in this case, certain price levels, we need to adjust the wave count accordingly and recognize this is not a 1-2 setup anymore, but this could be a larger 1-2, a B, C, or 1, 2, 3, 4, 5, or we're already one step ahead and we're now in the B wave of the third wave. Okay, please hang this ending diagonal above your map. So the question is, are we in this B wave, right? That's pretty much it. Or are we in this wave? That's pretty much what we're questioning. Okay, are we in this wave 2, so in this C wave of this wave 2, or are we in this B wave of this wave 3? That's the question. Okay, we don't know yet. We just don't know yet. Here's the Dow Jones. Also here the Dow Jones is now well inside its nice target zones for this green 2/B. Doesn't look like the downside is entirely complete, I must admit. We might see another 3, 4, 5 setup. But again, we are right here at some of the warning levels. I might need to lower it. Honestly, I'm going to lower it to here. This is 42,615. We did break below the first and the second warning level, so the bulls are placed on watch. Now, if we bottom out somewhere around this level here of about 43,000, then you can see we can still target somewhere around 46.5 to about 48,500. And that matches still very well here with the larger wave 3 target zone, okay, at around 47.5 to about 52,000, okay. 46.5 to 48.5 would match really well. And then we also just have an ABC for this final fifth wave. All right, remember the final fifth wave is also a ABC. Then we get ABC. Very simple, okay? That's what we're tracking. It's not easy. Diagonals are really tough nuts to crack. All right, on to the semiconductors. This is our adapted Elliott wave count that we had this protracted irregular flat B wave, and we're now in this C wave, which is also going to subdivide and survive into an ABC and fill the gap here at about 5,700. We did fill the gap here on the DeepSeek debacle that was late January. So technically we've done enough. So we can still see a much, much larger rapid decline for 1, 2, 3, 4, 5. Okay, so this is the alternative with the warning levels for the bears, of course, on this chart, meaning above 55.26, we cannot have a 1, 2 anymore. We closed the gap, good enough. So this is still possible. Again, this sideways price action is extremely difficult to interpret from an Elliott wave perspective. Okay, please bear with us as we try to figure out what exactly is going on, because essentially this market is trendless. Okay, it is just trending around 5150 plus or minus 400. That's it. This is the range we've been stuck in all the time. So unfortunately, then we can slap a lot of Elliott waves on this market, but eventually the market will take a certain course, and we have our price levels to watch. For the bears, anything above 53.78, most likely this is not a second wave anymore, and it's completely off when you go above 55.26, and then we look at, of course, gap fill for this wave count. Okay, and similarly, if we go below the January low, then we simply switch to this one. Okay, so honestly, from a trading perspective, this is a tough nut to trade for the buy and holders. This is a sell quickly market. Buy quickly, sell quickly. And then we have the unfortunate IWM, and here we were completely wrong, unfortunately, on this market. So I need to adjust this wave count, and I'm still working on this. It's a very tough nut to crack, and we'll see where we're going to end up. But I don't like it right now. So please bear with me as I try to analyze this market. It's very discombobulated. Just like the semiconductors, extremely discombobulated. I really have to use every single brain cell to make sure that I understand exactly what's going to happen next. It looks more like this was an A, this was a B, this was a C, and we're now again subdividing in another C wave lower. But please bear with me. All right, looking at MarketBrev, again, the AD line has been adjusted. Earlier this week, I posted on X that we had a new all-time high, but unfortunately there was a miscalculation in the AD line. This is the cumulative AD line, and we don't have a new all-time high. So this is concerning for the long term. So right now, the last time we made an all-time high was late November. Okay, so it's been soon 3 months. Why is this important? Because every major bear market has been announced by long-term negative divergence in the AD line. Here in the 20s, it took about 2 years. From the 50s to the 60s took 10 years, where we then got several 45 to 50% bear markets in quick succession. 74, I believe 69, and 67, okay? And you can see here we did make gradual higher highs, but this was a very large fourth wave. But very steep corrections, and a 50% correction is nothing to mince about and sniff at, okay? So it took a long time, 10 years, and then between 98 and 2000, 2 years, and then here 07 to about 08 almost, took about 6 months. So currently we're only at 3 months, so we expect this negative divergence to last a little bit longer, which is in line with our preferred other wave count. How we're doing for our intermediate term, still in an uptrend. We have the cumulative reading still a little bit above the uptrend line, but not by much. Okay, so this one can soon switch to sell as well. How we're doing on sentiment this week? Well, active money managers, the professionals, are 91% exposed to the stock market. It's quite normal. Nothing really that tells me or screams top. Okay, so this is quite noisy data. It's normal. Okay, this one doesn't tell me much. How about the CNN Fear and Greed Index? It's at 35. That's pretty fearful. Okay, so if we start to go into extreme fear, you know what to do. All right, when others get fearful, you get greedy, and when others get greedy, we get fearful. So we were fearful most of the time this month. Greed was about a year ago, and that's also shown here in the AAII investor sentiment survey. Still quite a lot of bears out there, 40%. Neutral has increased since last week, but not too many bulls. The average is 37.5%. It's a little bit in the noise, but with today's candle and probably early next week's candles, this might turn very, very bearish. Please remember, we just made a new all-time high on the NASDAQ 100 and the S&P 500. So there's really no reason to be this bearish already. I think we made the new all-time high yesterday on the S&P 500. If that's correct, I think we did. So, or the day before yesterday, at least this week. I don't care really exactly which day it was. This week we made a new all-time high. So why so bearish, right? However, last but not least, and though this is our least favorite indicator to track, but once in a while it really works, is that seasonality is relatively bearish going into the end of January. Okay, so we have, of course, one more trading week left for February, sorry, and that one is in general not the greatest. Okay, so looking at here at the February chart, we have a full trading week left in February, and doesn't look too great. However, downside is minimal compared to what we already had. So this suggests that after February, we should see a pretty good rally again going into May. Let's see if we can track this, that the market is going to track this seasonality and average. It is on track once again. That's nice. But oftentimes the seasonality is kind of, move in and out of being in sync with the average. That's really always very critical to know that it's just an average with a huge standard deviation, nothing to hang our hats on. But if the market follows it, it's a fantastic tool. That's for sure. As always, 60% of the time, it works every time. So the bottom line is that yesterday the market forced us to adjust our wave count. We informed our premium members real quick of this, and the market has reached those adjusted downside targets. Now the market can decide if it wants to do a larger wave 2 before 3, 4, and 5 kick in, or if it's simply going to do a smaller B wave, then a C wave, and be done with it. Okay? So we still expect new all-time highs going forward. We simply have to go through the machinations of this ending diagonal. So the question really is, so overall, bigger picture-wise, so this is then the August low, all the way on the left hand of your chart. This would then be the January 13th low, the number 4. The overall question is, are we in this larger B wave or are we already in this one? So the C wave of wave 5 will also subdivide into 3 waves, sometimes 5, okay? So most of the time it's 333, 333, 333, that type of stuff, okay? It doesn't have to be 535. It's possible, doesn't have to be. It can also be 333. It can be 335. That's the unfortunate variation within ending diagonals. I can show you many examples where we have seen some really interesting ending diagonals that are not yet in the Elliott wave books, but that's fine. We just want to point out, the question is, are we bigger picture-wise in this B wave, or are we bigger picture-wise in the wave 2, right? And then we get a 3, 4, and 5. So to be determined, we still expect this larger 5th wave to complete somewhere later this year. And then we'll see how much negative divergence is left in the AD line. And we'll see once we get a little bit lower in the beginning of next week, how fearful the markets will be. With all-time highs just this week, it seems a little preposterous to be this fearful already. This is kind of bear market territory fearfulness. All right. Well, take care, trade safe, and we'll catch you all next week.